Hi, Lara from Forex Info USA with your free US dollar index Elliott wave analysis for the week ending Friday the 26th of March. Starting this analysis with a look back to 1985, I'm going to have a good close look at these cycle degree waves. I do have a chart that goes back to the 70s that does show higher dollar prices prior to 1985, and it certainly has a strong 5-wave look down, so I'm really happy with labelling this 5 cycle degree ending here in late 1992. This was followed by what has a really strong 3-wave look from 1992 to 2001. This is about the length of time we'd expect a cycle degree wave to take. If it's a 3-wave structure, it denotes a flat correction, and in this case, because B is reaching lower than A, that's an expanded flat correction. With an expanded flat, we could expect a wave C that's going to be a long, strong wave C up and reach comfortably above the highest point here of A, which is about 122. Taking you now to a chart just for the last 10 years, we're going to have a look at this piece of movement here. Before we go there, this B wave was 111% the length of A wave. We could reasonably expect it's, according to guidelines, to reach between 100 and 165%. It could go lower, yes. However, when we look at the relationships between A and C within this, it's fairly likely that it's ended here. So taking you now for the last 10 years, and here's that A and here's that B, looking at this relationship between A, B and C. B was only a 30% correction of A. Reasonably, we could expect it to be more like 38 to 79% according to guidelines. However, it's not violating any rules. It's entirely possible that this is labelled primary B. Thereafter, what I really like about this whole structure is this this primary C wave within cycle degree wave B is a really nice 0.618 the length of A. It's entirely possible it's ended there at 0.618 the length of A, and B's corrected cycle degree 111% of A. Extremely likely. This C wave at primary degree was just 2.09 short of a perfect 0.618 the length of A. Thereafter, we've got of cycle degree C, which should take the dollar comfortably above 122 by the end of this year or so. We've got primary 1 and 2 complete, and we're working on the early stages of primary 3. If it reaches 1.618 the length of primary 1, it should take the dollar up to around about 104.58, probably by the end of this year. And sorry, that cycle degree wave C is going to take a few years longer than that, 5 to 7 years or so, to reach comfortably above 122 with corrections along the way. So taking you now to a regular daily chart just for the last 6 months, where this maroon 2 is this maroon 2 down here, and here's our recent dollar rises on a daily chart. We've got minor 1 and 2 complete, 3 complete, 4 complete, and we're working on towards the end of minor 4. The relationship between 1 and 3 at minor degree really isn't very good. I can't find any Fibonacci relationship between the two. However, 3 is just a little bit longer than 1, which isn't limiting the length of wave 5 at all. I'm using Elliott's channeling technique here to try and tell us when this wave 5 blue is over. A trend line from the high of 1 to the high of 3, create a parallel copy and place it on the low of 2, creates a nice parallel trend channel. We have a little overthrow in the 4th wave position, which heralds for us an indication of perhaps wave 5 overthrowing the upper end when it ends. It's extremely likely that wave 5 blue will at least come to fall just really close or touch this upper trend line, and fairly likely it could have an overthrow as well. Taking you now to an hourly chart where this blue 4 is this blue 4 down here, and looking now at most recent dollar rises with a 1, 2, 3, 4 could very well have ended here, or I have another target to the downside for its end. This wave count is invalidated with any movement below 81.04. As we're in a 4th wave, we don't expect it to get towards the end, to get to the end of wave 1 or enter wave 1 price territory. So if the dollar gets down to 81.04, this wave count's invalidated. Relationships between waves 1, 3 and 5 within this piece of upwards movement here are pretty good. Wave 1 and 5 have a nice little relationship. Wave 5 is almost exactly 0.618 the length of wave 1, and wave 3 is almost twice the length of wave 1, so that's reasonable. Within this piece of upwards movement here, wave 3 pink, the relationships within here are okay. 1 and 5 have a 0.14 difference, not perfect, but not too far off being equal. And wave 3 is just 0.03 longer than 3 times the length of wave 1. And that's not the best wave relationship, but it's adequate. Thereafter, so far within A, B and C within 4 pink down, C has reached an absolute perfect 0.618 the length of this wave A, so it's really likely that wave 4 pink could end here and the dollar could turn sharply upwards at the opening of trading on Monday. It's also really likely because it's corrected to a really nice 0.386 Fibonacci of this wave 3 rise, and it's got a beautiful turning point just around the wave 4 of the next wave degree down. It's a really common and likely turning point, and with these relationships between A and C having a nice Fibonacci relationship, it could very well turn and move up at the start of trading on Monday. However, what's also reasonably possible is that it could continue a little bit further down to reach equality with A, and wave 4 could therefore end down around about 81.36, and that's where C and A within wave 4 will have equality. That's also a really common relationship between the two. However, it's not going to get down this far. Wherever it does end, we do still need one more series of dollar rises to complete the overall look for this structure. To complete, I'll just go back to the daily, to complete this fifth wave up. It is technically possible that it has ended here. I think that would be really a little bit too early to call an end to it here. It still doesn't have a nice full finished 5 wave up impulsive look. I'm also expecting it to get pretty close to this upper trend line because of this 4th wave throwover using Elliott's channeling technique. I place a lot of weight on this channeling technique because it works so well. Another reason why I don't think it's over yet is we still don't have diversion with MACD. Here's the hourly chart. Here's our 1, 2, 3, 4. We're expecting another lot for 5. If this was the end of 5 here, perhaps with a shorter 1 and 3 and 5 here, we would expect to see divergence with MACD, and we don't. I don't think this is an expiring trend yet. When I see divergence on MACD, I'll start to consider that the upward movement for the dollar for the moment is over, because, just taking you back again, sorry about the flicking back and forth today, because what's going to happen when this is over is that's going to be the end of intermediate wave 1 down. We're going to have a 3-wave structure down for intermediate wave 2, and that's going to take a couple of months for the dollar. So we're going to have some really good downwards movement for the dollar coming up when this 5th wave is over. So I think it's really important to not call that one too early. I don't think it's over yet. That's all from me with your dollar analysis. If you would like in-depth Elliott wave analysis to help you with your trading for the euro dollar and or the pound dollar, as always, you'll find it on my site. I hope this is useful in your trading. I hope you've had an awesome weekend, and as always, may all your trades next week be profitable.